Did you know annual federal tax revenue from 1951 to 2014 has always hovered around 17% of GDP? This has been the case regardless of what tax policies we've had in place. You could verify this yourself by viewing the historical records from the Office of Management and Budget. Matter of fact, you can approximate an average for each of the presidential eras, whether we're talking about Truman, Eisenhower, JFK, Johnson, Nixon, Ford, Carter, Reagan, Bush, Clinton, W. Bush, or Obama. Tax revenue has always hovered roughly around 17% of GDP. Now, to be clear, the tax revenue in these eras has temporarily wavered on occasion, but it never ever dipped below 14.6% of GDP. It also never peaked above 19.2%. And when it did stray from 17%, it did not for any sustained period of time. No matter what the tax rates were, no matter who was president, no matter who was being taxed, or how many taxable circumstances arose, tax revenue, that is the actual dollars collected, always hovered around 17% of GDP. So, how is this mathematically possible? How can tax revenue stay roughly the same despite the implementation of tax cuts? On the same note, how can revenue stay roughly the same despite the implementation of tax increases? Well, the answer is simple. Economies change size. In fact, economic growth is the only variable large enough to account for how revenues can break even or even slightly increase even if tax rates decline. When additional economic activity is fostered, taxable transactions occur more frequently. Oftentimes, although not always, this phenomenon means that tax revenues can actually go up or break even though the rates had gone down. As the evidence suggests, this must have occurred numerous times. It is otherwise mathematically impossible to explain how certain tax reductions implemented in prior years actually resulted in the same percentage of tax revenue. So this begs the question, which path towards acquiring that 17% is most beneficial to the populace? Consider two choices. Choice A, we have higher tax rates, we possibly have a smaller economy as a result, and tax revenues are still around 17% of GDP. Now consider choice B. We have lower tax rates, possibly a better economy, and we still have tax revenues roughly 17% of GDP. This means under either scenario, we aren't underfunding anything. The question then becomes one of prosperity. Would you rather live in an economy that is expanding or not?